Welcome back to the deep dive. Today we're jumping into the Bitcoin intelligence briefing from November 7th, 2025. And this one's showing a market really pulling in two directions, high stakes. Our job is to sort through it for you.
Okay.
Let's unpack this. So the big story, the main clash in the last day or so, it's this really wild U-turn in institutional feeling. I mean, we just had this incredibly fast sell-off, right? 6 days straight, billions out of the ETFs. And then, bang, it just snapped. We've got actual money flowing back in. But, and this is the kicker, this good news lands just as the charts confirm, well, a pretty nasty bearish pattern.
Exactly right. You've got a fundamental floor, buyers stepping in, defending a level. But at the same time, the technicals, they're flashing warning signs. It's a bear flag structure. So the market's caught, short term anyway, between these bullish flows on one side and, frankly, bearish technicals on the other. How that resolves? Well, that's probably going to set the tone for the rest of the quarter.
And you can really see that technical pressure in the price, can't you? It dipped, about 2.5% in the last 24 hours? Slipped under that big $100,000 psychological number for a bit. Now it's back around $100,359 this morning. So let's talk about those key levels, battle lines.
Okay, yeah. So resistance first. Upside barrier is pretty clearly $110,000. And what makes that level tough is, well, it's a confluence. You've got the 200-day exponential moving average there. And critically, it's also the average price short-term holders paid, meaning anyone who bought recently is basically looking at that level as their chance to get out even. Lots of potential supply.
Right. And then below us, the support seems pretty obvious, too. That $100,000 arc, we've seen buyers show up there twice now, haven't we? Once back in June, and then again just this week. Price dipped below, but snapped right back up.
Yeah, that $100K level is holding. For now. But what's interesting, or maybe worrying, depending on your view, is that the chart watchers, the technical analysts, they're really zeroed in on this bear flag thing. It's a classic pattern. It suggests this sideways chop we're seeing is just a pause before another leg down.
Okay, the bear flag, it points to $92,200, right? Is that just like a pattern number, or is there more to it? Does that figure actually mean something concrete?
Oh, there's definitely substance there. If a $100K gives way, you'd expect maybe a pretty sharp drop designed to clear out leverage. And that $92,200 target, it gets back up from three totally separate models, which is significant. First, you've got the standard 1-to-1 Fibonacci extension from the bear flag itself. That's textbook. Second, there's still that unfilled CME gap on the futures chart, right around $92,000. Gaps like that often get filled, historically speaking. And third, if you look at past major corrections, doing a sort of proportional analysis, that points towards maybe $94,000. So that whole zone, 92K to 94Ks, it's become a kind of technical magnet pulling the price down if support breaks. A gravity well, like you said.
Okay, hang on, though. We just said $240 million in institutional money just came in, seemingly defending $100 real money. Why put so much weight on chart patterns and an old gap compared to actual confirmed buying?
That's the million-dollar question, isn't it? And that's why we're calling it a war. Technical levels can become self-fulfilling, partly because traders expect them. But let's zoom out for a second. This is bigger than just daily charts. This is a test of the whole long-term bull structure. See, the price has fallen right back to test the 50-week simple moving average. That's around $102,950 right now. And analysts are flagging something important here. The slope of that average, it's turned negative for the first time since this bull market really kicked off.
Right. What does that mean practically? If we close the week below that 50-week moving average, is it game over or just a setback?
Well, historically, a weekly close below the 50-week SMA has been a pretty strong signal for a major trend shift, a macro reversal. It suggests the underlying uptrend, the structure that's been in place for, years, is broken. It wouldn't necessarily mean instant collapse, but it implies a much longer, maybe tougher period ahead.
Yeah.
It would definitely validate those bearish technical warnings.
Okay, that really sets the stage for the potential downside. Huge pressure building. So now let's pivot completely. Let's talk about that flow reversal because, frankly, it seems like the only thing holding back those technical targets right now. We had that really rough patch, right? 6 days, $2.04 billion out of the ETFs.
Yeah, brutal streak. But here's where it gets really interesting. That streak, it's officially done. Over. The latest flow data just confirmed it. On November 6th, the U.S. spot Bitcoin ETFs, they saw combined net inflows of $240 million. That's a huge swing in sentiment, suggesting a major shift in how institutions are thinking right now.
And we know who was buying, right? This wasn't just random retail speculation. It looks like conviction money.
Yeah.
Fidelity's fund, FBTC, pulled in $113.3 million. Ark Invest's ARKB got $82.9 million. These are big established players.
Exactly. And that helps explain the divergence you see. The $2 billion that flowed out, that was probably, faster money, maybe arbitrage players, macro funds cutting risk, people reacting quickly to the price drop. But this $240 million coming in, led by names like Fidelity and Ark, that looks more like long-term allocators, people who saw that dip below $103,000, not as a reason to panic, but as a buying opportunity. They're actively stepping in, defending that $100,000 floor we talked about.
So conviction buyers at $100, but they're facing down these technical targets down near 92K. A real standoff. Let's widen the view again. Look at the bigger picture, the long-term institutional valuation debate, because we got two major forecasts in the last day, and they're conflicting.
Completely conflicting, yeah. On one hand, you have JP Morgan. They just put out a new report, and they're bullish, setting a price target of $170,000 within the next 6 to 12 months. Their whole argument is based on this gold parity idea, basically saying Bitcoin needs to hit 170K to match the value investors hold in gold as a store of value.
Okay, so that's a pure digital gold store of value argument, 170K. But then Cathie Wood and Ark Invest, they just revised their big 2030 target downwards from $1.5 million down to $1.2 million. That's a $300,000 haircut. Why? What changed for them?
It's all about competition, apparently. Wood specifically said that $300,000 reduction is because of stablecoins. Their rapid growth, their increasing use cases. She's basically conceding that the stablecoin market, which is now, $300 billion, it's successfully grabbing the medium of exchange role.
So if stablecoins take over that payment function, then that piece of the potential market Ark thought Bitcoin would capture, it's going elsewhere. In their view.
Precisely. It introduces a competitive threat to the long-term bullish narrative. Market share being captured by stablecoins is market share not pushing Bitcoin towards those higher targets, and maybe makes it harder to fight off downside pressure, like that 92K target. It adds risk.
Interesting dynamic. But some companies are still acting very bullishly, right? Take Metaplanet, the Tokyo-listed company holding Bitcoin on its balance sheet. They just took out a $100 million loan backed by their Bitcoin holdings to buy more Bitcoin and fund a share buyback. That sounds like management screaming, buy the dip.
It absolutely does, a very strong signal for management. But here's the paradox. This is fascinating. Despite management being so aggressive, the market seems skeptical. If you look at their MNAV, that's market cap relative to the net asset value of the Bitcoin, they hold it just dropped below 1.0. It's at 0.99 for the first time ever.
Wait, say that again? So the stock market values the entire company at less than the Bitcoin it actually owns.
That's exactly right. It suggests that these easy-to-access, regulated, low-fee U.S. spot Bitcoin ETFs, they're basically eating Metaplanet's lunch. Why would an institution buy this more complex leveraged proxy stock in Japan when they can just buy a simple regulated ETF in the U.S.? The success of the ETF seems to be cannibalizing the value of these earlier corporate adopters, and nobody really saw that coming. I think it's a huge shift.
Wow. Okay, speaking of competition and shifts, let's follow that stablecoin thread from Cathie Wood. Regulatory clarity seems key there.
Yeah, stablecoins are definitely becoming more institutionalized. You mentioned the $300 billion market size. Some projections see that hitting maybe $2 trillion by 2028. Huge growth potential. And the new U.S. law, the Genius Act, is seen as the main catalyst for that.
What's the core of that act? What does it do that's such a big deal?
The main thing is it requires issuers to get monthly independent audits, attestation reports from registered public accounting firms to prove, basically, that they have the reserves backing the coins one-to-one. Now, that sounds good, right? Transparency. But it's a huge compliance cost. It essentially shuts the door for smaller startups. So the Genius Act isn't just regulation, it's kind of forced centralization. It cements the power of the big players like Circle and Tether and makes it much harder for anyone else to compete, even globally.
Okay, got it. So institutionalization, but also centralization. Meanwhile, switching gears to altcoins. Looks like the Zcash privacy rally we mentioned yesterday is cooling off, and money's moving into, what are they calling it? The Dino coin narrative. Older coins.
Yeah, exactly. Older, established utility tokens that have been kind of dormant for a while. The standout example right now is Filecoin, FIL. It's up, over 50% in just the last 24 hours? Pretty massive move. And the story being pushed is linking Filecoin to DePIN, that's decentralized physical infrastructure, and also the AI sector. It's basically capital rotation. Investors looking for coins that are established have survived, but are still way down from their all-time highs, like FIL is. Looking for catch-up plays.
Makes sense. Okay, and finally, let's just quickly touch on the Solana ETF launch aftermath. Price didn't react well, did it? Even though the inflows were strong.
Yeah, it's pretty much confirmed as a classic sell the news situation, a textbook example. The launch week itself was successful by the numbers, $421 million in net inflows. Bitwise's BSOL led the way. Very solid demand. But despite all that new money coming in, the actual price of SOL, it dropped about 20%, went from around $205 before the launch down to $165. It really shows the market is getting more mature, right? It priced in this major catalyst way ahead of time. So when the buying actually started, the profit takers just overwhelmed it.
Which brings us full circle, back to Bitcoin and this immediate fight it's in. The market seems defined by this tug of war right now.
Absolutely. You've got the $240 million inflow acting as a sort of floor, showing conviction buyers are present around 100K, defending it. But you absolutely cannot ignore the technical setup. That bear flag target down near $92,200 is real pressure. So yeah, $100,000 is the clear battleground. That's where the short-term direction gets decided, likely in the next few days.
Okay, so bottom line for listeners right now, what are the absolute key things to watch in the next 24 hours? Like the top 2 data points.
Number 1, ETF follow-through. Simple. Was that $240 million inflow a one-off blip or the start of a new trend? If we see another day of decent net inflows today, that's a strong bullish signal. It confirms the buyers are serious. Number 2, the $100,000 defense. Specifically, watch the daily close. A brief dip below isn't the end of the world, we've seen that, but a daily close below $100. That validates the bear flag pattern, and it makes that move toward the 94K zone much more likely.
Right. So what does this all mean for you, thinking about your own position? We've laid out the short-term battle, conviction inflows versus technical pressure at $100. But zooming out, do you focus on JP Morgan's $170,000 target, banking on Bitcoin eventually matching gold, and maybe ignore this short-term bearishness? Or do you lean towards Cathie Wood's thinking, worrying that stablecoins are already eroding Bitcoin's potential, meaning maybe those conviction buyers aren't quite as strong long-term as they seem? Which narrative feels more compelling for how you manage risk right now? Something to think about.